Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily SPY report for Tuesday, February 8th, 2022. Before we look at the charts, as usual, I want to encourage you to please click like each and every time you watch the Daily SPY report. It does help us out a great deal in being found by others on YouTube when they search for SPY analysis, S&P 500. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the Daily SPY report, and so seeing it early, certainly before the opening bell, is important, so it remains relevant for your trading and analysis. And let's take a look at the charts. This is just a reminder of sort of the wedge we're in right now. A couple of weeks ago, maybe a little longer than that, we settled below that long-term channel bottom. Presently, today, Tuesday, at 444.74. And following that settlement back above that formation, I anticipated, recovery into the upper 450s or wherever that channel bottom was at the time. We pretty much hit it right on the head, 458.69. And so we're still inside that. That pretty much defines really the week ahead for me. And closing outside of that range, and there are other numbers I need to add here in a moment, but really, in essence, closing back outside that range should result in a directional indication as we continue into late February and early March. Now, today, Wicked Stocks put out one of its free weekly stock picks. We do one free stock pick a week and two for premium members. The free stock pick that went out today was on Marathon Oil, and it's actually testing a significant overhead resistance as we speak. In fact, it's pushing through it as we speak. The big question, of course, will be whether we close above that significant area at the end of this week. I'll let you watch that video if you're interested, but I'm also going to show you here West Texas Intermediate crude oil. This is a weekly chart of WTI crude. This is a futures contract, presently the March contract. I just wanted to sort of emphasize the fact that this has been a targeted area of resistance, 92.22 to 93.06. It's a combination long-term channel top that spans 12, 13 years and a descending two-thirds speed line that's even longer in the making, goes back to the 2008 high. This is a meaningful zone of resistance. So we're talking inflation, and we're talking, sort of endemic inflation for the economy. If we close above this region at the end of this week, and I'm adding a 1% on that because of the long-term structure here, 93.06. If we close at 94 even or higher, 94 dollars a barrel or higher for the March WTI crude futures contract, then we should see significant gains as we continue into spring trade. The next, possibly in as little as 2 to 3 months, but I'd give it 3 to 5 months or so, whereby we should reach 115.08 a barrel. And all this conversation, all the sort of the chatter in the financial community about inflation. It's not just chatter. I mean, it's a real legitimate concern. Inflation is plaguing the market right now. It is impacting Fed decision making, interest rates, so forth and so on. And so I guess the takeaway here is if we close this week above that 93.06 formation, that only adds fuel to the inflationary concerns. And I would think that the likely outcome would be the market continues to slide south, closing back below that 444.74 formation would be a sign of heavy trade as we continue into March. And I do need to add, and I have been actually the last week or so, I've been showing a rising one-third speed line. Let's take a look at that right here, and that is at 440.37 today, and it's rising. It actually all comes together at the end of the week. So I'm calling this sort of a range of support now that is 3 stars, can absorb weekly selling pressures, 440.37 to 444.74, able to absorb weekly selling pressures. And from here, we can rally back into the upper 450s again. The 458.69 to 460.82 area is actually in reach within 3 to 5 days of testing the 440.37 to 444.74 area. Let's take a look at the support and resistance that might make more sense. You can see the 440.37 to 440.74 area that is narrowing every single day, so it becomes a little easier to trade for position traders, swing traders. You could buy 444.74, stop out below 440.37. However it is that best suits your needs, but holding above it will keep the upper 450s, low 460s in reach this week. Let's take a look at the upside. Very similar to Monday's, 452.66 can contain intraday buying pressures, and below which we can quite easily slip into the low 440s, the 440.37 to 44.74 area today. But if we push or open today above 452.66, 458.69 is in reach, and that is once again the start of a gradually narrowing range of meaningful resistance up to 460.82 that can contain weekly buying pressures. Let's talk downside that if we do, let's say if we break 440.37 today, 435.03 is in reach. If we close below 440.37 today, we should reach 431.24. I'm going to say tomorrow. And then over the next, I think I say in the text 2 to 3 days, it's probably more like 3 to 5. I do think volatility will pick up if we close today below 440.37. And so, 420.76 in reach then by Friday's close. We can double bottom there for a day or two, perhaps. But I really think if we close below 440.37, we're back into being significantly on the defensive for the SPY. And honestly, that 402.12 formation keeps sort of screaming at me in terms of a reachable objective. So closing below that 440.37 level, and I don't show it on this chart, it's just too tight with regard to this chart construct, but closing below 440.37, obviously also below 444.74. I'm back to expecting 402.12 over the next 2 to 3 weeks under kind of a heightened volatility framework, and that 399.56 to 402.12 area able to contain annual selling pressures. There's no doubt in my mind that the long-term dynamic as defined by this channel structure, 399.56 to 402.12, remains bullish through the year. It's just that we can test it between now and the end of March or sooner. Let's take a look at the upside that if we do close above 458.69, we do have ourselves a good low, I think, through March trade. I would then anticipate the high area 479.98 within 2 to 3 weeks. And, I think by late March, as we continue into April trade over the next few months, we could push on to new highs, that 496.54 long-term trend line in reach again within, let's just say, a couple of months of closing above that 460.82 formation. So we're kind of playing ping pong right now between it's called the low 440s and the upper 450s. I have no idea which is going to win out. That's why I wanted to show you that crude. I think it may have something to say about it. We are testing that long-term resistance in crude. We can fall off from here back to $68 a barrel. Just want to mention that over the next few months. And that should lend support to the stock market if that does play out. But closing above 93.06 West Texas Intermediate on Friday by the 1% margin of 94 even or higher March contract. And I think we're looking at $115 a barrel. And I can't help but assume that this will keep a weight on the broader stock market as we continue into the second quarter. And that is all I've got for Tuesday's Daily SPY Report. Please click like each and every time you watch the Daily SPY Report. We'll definitely appreciate it. And subscribe to the Wicked Stocks YouTube channel. And I will see you tomorrow for Wednesday's Daily SPY Report. You have a great day.